Today is Q&A day, and I'm going to answer a couple of the questions that I found a bit difficult to answer in the comments because, well, time, and I can talk a lot faster than I can type, which is pretty fast. I hope everybody's having an awesome week. I know it's the end of September, but it was 100 degrees in Texas yesterday. What's up with that? So a couple of our crypto trades triggered, and that's nice. And we've got one stock running for its life. It may be running up or it may be running down. I'm wearing one of their products right this very second. That should be a dead giveaway, right? Yeah, if you can't read, Nike. I love my Nike Metcon 2 shoes. I wear them like all the time. I'll talk about the trade setup shortly. Then I'm going to answer a couple of great questions from the comments on prior videos. Ask more questions in the comments below. I love questions. A couple of questions I've fielded in the past. Why do we park on driveways and drive on parkways? How do you nail Jell-O to the wall? And lastly, why would anyone want to nail Jell-O to the wall? Okay, enough dad jokes for now. Let's look at the open trades, then the factoid of the day. This one's going to be fun. Then our Nike setup, and then I'll answer the burning questions of the universe. Get some coffee and stick around. Remember to click the subscribe button and hit that bell so you don't miss any of our trading goodness. And here's all that happened since Monday. Apple hit our first target, and now it's just going sideways. Still in it with my second half stop at break even. The S&P 500 futures target hit right here, half off for profit, and second half closed break even right here. So I'm done with the S&P for right now. I think the pound CAD is just messing with us right now. Just all this sideways going on, still waiting for it to go our way. I'm thinking if we get a close below this level right here, I'll just take the loss and move on. It's in another consolidation right here with the volume and the volatility decline going on, so I'd say the momentum of the original break is gone, and I'm going to talk more about this in just a minute. Bitcoin finally broke this descending triangle. We've been waiting for this one forever. I took it short right here at 85.30-ish. I hope you guys didn't miss it since I mentioned it on Twitter a couple of hours before the close. Well, it's on its way to the first target of 80.51.69, and the stop is 92.47.49. And along with Bitcoin, Ethereum Classic also closed below the trading range that we've been looking at for a while. So I took it short right here around 464.66-ish. My target is 399.33 and my stop is 562.66. Of course, if we get a close back inside the range here, we'll go ahead and shut it down for the loss right then. And that's all the open trades for today. Now let's look at the factoid of the day. I hope you can wrap your brain around this one. Today on our factoid of the day, we're going to talk about implants. No, silly, not that kind of implants. This kind of implants. Yes, I'm going to talk about mind control. Not that kind of mind control. Who's doing these stupid pictures? Get it right, dude. No, this isn't science fiction, but it was frequently imagined as science fiction. Several companies are on the forefront of developing brain-computer interfaces, BCIs, also known as Utah arrays, aimed at restoring mobility to people with paralysis, neurodegenerative disease, or limb loss. Utah arrays consist of metal electrodes protruding from a silicon base and are surgically implanted in the brain's motor cortex. These computer interfaces record neural activity in the brain and translate them to command external actions like sending text messages and moving robotic arms. They say this tech could have non-medical applications as well, like controlling devices or driving their cars using their brains. Well, If that's not science fiction made over, I'm not sure what is. And of course, one of my favorite people is behind some of this tech. You may recognize Elon Musk of Tesla fame, who has invested about $100 million in Neuralink from his own pocket. And the U.S. military has made a significant investment in paradromics when they became interested in BCIs, when it discovered that the robotic limbs it was developing for injured soldiers needed additional brain control. Of course, the problem is each electrode can read only 1 to 4 of the 100 billion neurons in the brain, so this is still pretty much a fledgling technology. Plus, what about the moral questions? Who's responsible if the tech doesn't work and someone dies? And what about security from brain jacking? That would be significantly more serious than someone hacking my Facebook for sure. Tell me in the comments below what you think of this newish technology. And I say newish because they've been trying to work on this for a long time. Hat tip to the hustle for this news nugget. I'll include the link below. And on that note, let's take a look at Nike. Plus, as a full disclaimer, I own quite a few Nike products and I'm very satisfied with all of them. But that has absolutely no bearing on how I analyze their stock. I want to make money trading, not throw it away just because I like the company. I believe I recall saying the same thing about Tesla. And here's a daily chart of Nike, ticker symbol NKE. Nike has been in this trading range right here since late April. You can see that there are several touches of the line up here and up here. Didn't quite make it all the way right in here. I believe the bottom of the range is probably in here somewhere actually. But because of these anomalies right here, due to the dividend announcement, I wanted to move the line down to 77 to include those right there. Now, I know you've heard this preaching before. A line is never just a line, it's always a zone. And never look for perfection in the patterns because it's not there and it doesn't matter. That makes the line placement sort of subjective. I typically make sure to include all the candle bodies inside the consolidation. I also only take the trade when it closes outside of the consolidation. That's the reason why I stress a close outside. I also look for a drop in both the volume and the volatility measured by the ATR or average true range, which is simply an average of the length of the last 14 candles. I love to see patterns confirmed by those two things. And while I was recording this video, Nike has jumped way up above the pattern right here, likely due to the positive earnings statement that just happened. Let me clean some of these lines out of here, or all of them. Obviously, the volume is good right now. If we get a close outside of the range up here, go ahead and jump right in. Just know that probably going to expect a little bit of retracement from that big jump. So here's the trade plan. We will buy a daily close above the range or above 89.60, or sell a daily close below the range or below 77, which is pretty much unlikely, I think, at this point, unless something huge happens and this thing drops like a rock before the end of the day. On the breaking candle, make sure the volume reaches the volume average right here, which again I say unless something huge happens. Looks like today is the day. If, however, it doesn't happen today and the volume doesn't quite reach this when it does break out, then divide the volume by the volume average right here, and if you don't get at least 0.75, then stay out of the trade. As usual, the stop loss will be 1.5 times the ATR, and the first target will be 1 times the ATR. So on the breaking candle, find the ATR here, multiply it by 1.5, and put your stop loss that distance behind your entry, not behind the range, and put your target 1 times that number ahead of the entry. If after entering the trade we get a candle that closes back inside the pattern here, We will take the loss right then and not wait for it to hit the stop loss. Our intention is that a breakout from these patterns should be explosive and hit our target fairly quickly. If the momentum goes away, we want to shut the trade down without taking a full stop if possible. And hang around for the training after this. I'll be talking a little bit more about momentum and about how to identify it and so on. When the price hits our first target, we'll close half the position for profit and set the stop loss to break even on the remainder. We will then follow stops as price moves in our direction until the market takes us out. Now typically I do this with two positions. The first one has a hard stop loss and a hard take profit at the appropriate prices, and the second position will have a hard stop loss and no take profit directly associated with it. I only risk 2% of my account on each trade because no single trade should make or break you. And that is the Nike setup for today. And now I'm going to answer a few questions from the comments. If you have any questions you'd like answered, please put them in the comments below. I'll either answer them in a reply or include them in a future video, or all of the above. I'm not including the names of any of the questioners in here because I didn't get permission directly from them to do so, but I'm sure that you can look at the comments and find out who posted them. And of course, I'm sure you guys know which ones you've asked. I posted a screenshot of the question right up here. See, that way I get to brag that someone said I'm always great without having to actually say it myself. You know, like a humble brag kind of thing. Just kidding. I'm just a guy that's been doing this for a while, and you guys can do this too. You just have to be observant. And the first question is, you are always repeating, if the momentum goes away, exit your trade. How do you determine the strength and weakness of momentum? First off, let me say, you guys see here everything that I look at when I do these trades. There are no hidden indicators or anything like that. So you guys know all the details, and everything else is just how I look at the trades, how I look at the charts. And that's what I'm going to try to help you understand. The short answer to this question is that price action, volume, and volatility all tell the story of the strength of the momentum. It starts with seeing a reduction in both of them during the course of the consolidation. Nothing much is happening, we're all just watching the grass grow and the paint dry, then suddenly this move happens outside of the consolidation. Now everybody and his grandma is on this thing and wants a piece of it. That's why I want to see a good volume on the move out of the consolidation. The volume average and volatility are pretty much useless at this point because it's going to take them a couple of weeks to catch up to the big move. So the important reading here is the instantaneous volume. Watching that should keep us out of head fakes. By the way, in case you're unaware, a head fake is where the price pushes out of the consolidation and then pushes back in. Okay, think about what happened on this situation right here. Okay, this comes from the Apple chart, and this is actually the pattern that we're watching right now. And as you may know, I originally drew my line down here at this dotted line, okay? Then I think on some news event, price opened right here, which is kind of what's happening on Nike right now. Price opened way above the line. It went way up here. So think about this. It looked like this. But then it dropped and ended up closing back below my line. So we did not enter this trade because the close was down here and it was in my original consolidation. But that is a serious head fake right there. And that if I was not waiting for a close above the line to enter this, I would have been in it right here long, and who knows, it may have hit our target up here, but it closed back in here, so the momentum of the trade is gone, and obviously the following day pushed up and then pushed down to here. So after this took place, I moved the line up into here. Here's another example. This comes from one of our open trades right now too. Think about what this line looked like it opened right here. It pushed up to right there. So this was a nice, pretty green candle that looked like it was going to break out. But it obviously pulled back and didn't even come close to breaking out. So this would have been a pretty bad loss for us if we had entered this thing here and it ended up closing down here and then going down the next day. That's a couple of examples of head fakes. Now, head fakes can also happen in the form of a close outside the consolidation and then like the next day closing back in, and that's happened to us too. Of course, finding head fakes historically is pretty easy, but knowing what's a head fake while it's happening is impossible, because no one knows what the market's going to do in the next 5 minutes. So I use daily closes and volume to help me stay out of head fakes. If a daily candle closes outside of the consolidation, it's far less likely to be a head fake, although that happens once in a while. Back to momentum. Let me start with an engineer's definition of momentum, because that's what I am. The momentum of a body is defined as the product of its mass and velocity. Since velocity is a vector quantity, momentum is a vector quantity. Okay, before you start having nightmares of high school physics, let me explain this in traders' terms. First off, vector quantity simply means that the quantity not only has a numeric value, but it has a direction as well. It's as simple as that, so don't let that word throw you off. So you can think of the mass as the trading volume bars. The more traders that are behind the momentum, the farther it will travel. The velocity, since it's directional, is the volatility and the price action combined. How much speed does it have in our desired direction, in other words? So, bringing it even closer to trading terms, let's take a look at one of our open trades, Apple. You can see that during the course of this ascending triangle, Apple's volume and volatility dropped off right here and right here. Remember, you have to ignore the outliers. You know, these are outliers. I sometimes call them anomalies. It's a statistical thing, but when the price jumped out of the consolidation, it exploded with increasing volume right here. This is where the jump out took place, and this is where we took our entry, and it just continued on the next day. So the mass part of the momentum was good. We had greater than average volume. The big volume accomplished quickly what we were looking for, a move up to the 1 ATR level here at 221.39 where we took profit. That's a great example of momentum. This is also a great example of the momentum slacking off or dying. After it went up here, the momentum just died on it, and it just started going sideways. It lost its upward momentum, and it's back in this consolidation. In fact, this could be a descending triangle right there. Obviously, I would rather this have continued up, but it looks like we're just going to end up breaking even on the second half right here. I think it was the great philosopher Mick Jagger who once said, "We don't always get what we want." Okay, let's take a look at another example from our open trades. Okay, this would be the pound CAD, the Great British Pound Canadian dollar, and we got a huge momentum move right here, breaking out of our consolidation. But it was kind of on wimpy volume. It was at least 75%, so we got a half size position in here. But right here, it's kind of hard to see with my lines here, but it's below the volume. I think it was like 84% of the average volume. It closed and the momentum died. And now, once again, we got a trading range here. And that's the reason why I'm talking, if this thing closes down below this trading range that's formed right here, then I'm gonna close this. Okay, we were just late to this party, and that happens sometimes. Okay, this was a party. It was not a huge party because we didn't get the volume, so we're only half size, and that's nice. But it moved up quite a bit, and the momentum died early. Had we had more volume here, if the volume had come up here, it's likely that this, well, it's possible that this would have just continued up and we would have been entered up here instead. But it's also possible that it might have stopped and continued the next day. So it did give us a little forewarning with the reduced volume down here. But here's something else that's kind of telling. Notice that the volume has continued to drop off and the volatility is dropping off once again. Okay, so we got this move and then it went back into consolidation. So we'll likely be closing this at the end of today. My point here is I'm not clairvoyant. I can't magically tell if these trades will work out or not. I know that doesn't sound very guru-ish, because all these guys will tell you that they can know exactly what the market is going to do and yada yada yada. I'm not into that thing, you guys. I spent a lot of time listening to those guys when I started, and it derailed my actual understanding of the market for years. So I want to make sure that I don't cause that for someone else. Your success is not dependent on you knowing what the market is going to do. There's absolutely no way, short of a time machine, I guess, that you can know what the market's going to do. Your success is dependent on how you manage the trades and the confidence you have in your strategy that you gained through testing. That's why I stress the testing. That's why I stress the psychology. That's why I stress the you can't know what the market is going to do. No one knows what the market is going to do. Okay? I hope I covered this question. Let's move on to the next one. This is a fairly easy one. My volume indicator has no average volume like yours. Where can I have one? Or where can I get one? This is one of my pet peeves. To me, what good is a volume indicator if you have no idea what the average volume is? And I fought that battle for years. I suppose it must be useful to somebody because so many volume indicators have no average attached to them. Anyway, the only trading platforms that I use regularly are TradingView and MT4. The TradingView volume indicator has the average on it by default. So if you're using TradingView with the volume indicator and you're not seeing the volume average, be sure to check the settings and make sure that you're using a color that contrasts with your chart, because if you're using a white chart and a white volume average, then you're probably not going to see it. As for MT4, who do you suppose thought putting volume bars with the candles was a good plan? Like right here. So I guess right about here is where the volume bar ends and the candle begins, or does it? I know the candle ends there, but I wonder how far up the volume bar actually goes. So I don't know what they were thinking. Well, I use an indicator called Volume MA. I got it at the MQL5.com code base. I'll put the link below the video. There are hundreds of MT4 and MT5 indicators available at the code base and elsewhere on the internet. In fact, there are a bunch at tradingstrategyguides.com. You'll find the link to those below the video as well. And one thing that I do with this Volume MA, and it's just me, and maybe I have old eyes, so I have trouble seeing these things, but I hate really skinny lines on the volume. So I change the settings on the lines. Come up here and you click on color, and then on width, I change these two to 4. That's the width of the vertical bars. And I change this to 2, and I just like the way this looks better that way. But personal preference. You do you, boo. Okay. That's all the time we've got for questions today. So let's slide right into the trading maxims. Now, you know, a maxim is a general truth, a fundamental principle, rule of conduct, or just a proverbial saying. These maxims I show you come from anywhere and everywhere, including a few that I've written myself. Very few. The purpose of my maxims is to motivate me to discipline. Motivation is a great start, but discipline is what keeps you going during the tough times. I suggest you start your own list of maxims to help you in your trading. Feel free to borrow from my list. To the archives today. Ooh, this is a good one. Tim's trading maxim number 25. Trading is a marathon, not a sprint. Trading is not a get-rich-quick scheme. If that's what you're here for, go do something else. This ain't it. Don't get in too big a hurry to lose all your money. Take the time to back test and forward test all your strategies. If you spend a few months doing that, you're going to have it for the rest of your life. And trust me, if you get in too big a hurry to make money, you won't. Make money, I mean. You might still get in a hurry, but you won't make money. And I'm speaking from personal experience here, okay? You don't have to learn every facet of the market to be a good trader, but definitely spend the time it takes to have a good handle on your corner of the market, your strategies, your trade management, your psychology, all those sorts of things. And yes, you can make a living at this, but it's not going to happen overnight. Don't spend scared money. Don't put your house payment in your account to double it by the end of the month. It ain't going to happen. Scared money is the worst money to trade because you're always going to be afraid to lose it, so you're not going to risk what you have to risk to be successful and to be profitable. Just don't give up. Keep trying, keep working at it until you get it. And remember our Nike trade plan here. We're going to buy a daily candle close above the range or above 89.60, or sell a daily candle close below the range or below $77. If the volume is not quite average, go half size as long as it's at least 75% of the average. Your stop loss is 1.5 times the ATR, and your first target is 1 times the ATR. And remember to check out the trade management video for more details. The link will be below. And do it. Just do it. Do it. Sign up for my free Trading Picks email list. You don't want to miss any of these, okay? I'll be sending out 3 or 4 trade picks a week. Stocks, futures, cryptos, forex, whatever. You'll get first shot at them. Plus, first notifications of anything else that's coming down the line. And the best thing is, it's a freebie. I'll put the link below the video. Be sure to come back to Trading Strategy Guide's YouTube channel every week on Monday and Friday for my analysis, and on Wednesday for training videos and trade setups and so on, just like today. Thanks for all the input you guys are giving me. Continue to let me know what things are bugging you about your trading, what questions you have, and so on, and I'll try to do my best to give you the answers. I'm up to explaining anything you guys want me to explain. Just let me know what you're thinking. And don't forget to let me know what you think about brain-computer interfaces. Maybe one day we'll just be trading by thinking. Yeah, I already do enough trading without thinking. Also, follow me on Twitter. The Twitter link is below. Tell your friends about us and help us make this the best trading channel on the internet. As always, thanks for watching, thanks for subscribing, and don't forget to hit the thumbs up below, and have a great remainder of your week. I'll see you next time.